Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, as always, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is an expert on geopolitics, precious metals, and financial markets, and the founder of Wealth Research Group. It's Lior Gantz. Welcome back to the show.
Thank you for having me back.
Very happy to have you back. And I want to start off with uranium, a commodity you've been pounding the table about for a few years now. And we have seen quite a run up in the spot price and many of the related equities. Although some of the stocks right now are pulling back as we speak. Social media can kind of be a crazy place, especially when it comes to the uranium trade on Twitter, people in jubilation. And now we're seeing despondency at these movements in the market. I'm wondering, from your perspective, has the uranium bull market run its course, or is this just a healthy correction in a longer term bull market?
Certainly, it's not run its course because you're not seeing a lot of mines that were in idle or care and maintenance coming back online yet. It's a very slow process. And, when you think about where we started in November 2016, when Trump was elected, I started to talk about uranium. Some of the stocks that we featured were worth 50, 60, 70 cents. They're now worth $4, $5, $6. And I think that if you look at the spot price since then, it went from about $18 a pound to over $100 today. But because we're not judging from the same viewpoint, you can't think about just the price movement as your only gauge for this being a bull market that's been extended. Two things to keep in mind. In the 1970s, when the last bull market in uranium, or when the first real bull market in uranium started, the price of uranium went up way more than tenfold. And then in the second one, it went from $7 a pound to $140 in the 2000s. So to go up 10 or 20 times, that is normal. Right now, we've just gone up sevenfold. So that's one thing. Secondly, when you look at the world right now, the United States still has one active uranium mine that's very negligible. So when you look at the geopolitical map, the idea that there's a bear market now starting in uranium, when the world's largest consumer of uranium is still importing from Russia, and where the processing of uranium is mostly done in China, that is just naive thinking. We are entering a deglobalized stage where countries like Russia and China are going to hold their commodities hostage and not going to depart them to the United States unless the United States takes off sanctions on oligarchs, for example, in Russia, or look away when China does IP theft. Everything that everything that you've been led to believe up until now in the 1991 to 2024 era, which I call the hyper-globalization era, the American-led era, America imposes its will on everybody else era, is over. It's over. And if you think it's over because of Biden's weakness, if Trump gets elected, it's going to be even more isolationary, because Trump's approach, not that he's weaker, but Trump's approach is, you know what? You guys should duke it out. I'm here. If you need a solution, I'll come. I'll broker a deal. I'll bring you all the leverage of the United States, but I'm not going to impose whatever the will of the United States is. I'm not going to play the idea that I am better than you, I know more than you, etc. I'm not going to try to impose liberal ideas on you or Western ideas on you. You duke it out. When you feel like you've had enough pain, then you can call me. I'll come in like I did with the Abraham Accords and other things. But I really want people to understand the uranium supply chain that exists today is too intricate, too reliant on countries that have no vested interest in each other anymore to supply each other, and it obviously relies on open seas, which is very debatable these days. As you know, Kazakhstan, which is a a country that is in an area that's going to be very much in conflict in the next few years is the world's largest producer of uranium, and it's going to be very hard for the United States to keep sourcing from there. Russia obviously can stop sourcing to the United States. And by the way, U.S. senators are already working on a bill to ban Russian imports into the United States. So when you look at all of that, there is literally no reason to think that any commodity on earth is in a bear market right now, because there is truly a situation where all this globalization is unwinding, and a lot of countries are not going to just settle for free trade agreements. They'll want more. They want assurances. And when you start negotiating, there will be commodity wars for sure.
I think that's a great segue to another commodity you've been very vocal about recently, which is nickel. So talk to us about your investment thesis for nickel and why you're so bullish right now.
Okay, nickel for the most part is a super boring base metal. When you look at your kitchen sink, that stainless steel around it, that's nickel, and that's why nickel is a forgotten metal. But in the last 10 years, it's started to find new uses. One in super alloys, so it's very important for the defense industry, for aerospace, and for tanks. But even bigger is only 6% of nickel consumption right now goes into EVs, but that number is going to grow exponentially, because there's 29 kilos of nickel in every EV battery compared to 6 kilos of lithium. So you're talking about a big amount of nickel that's needed. And let me tell you where nickel is made. For the most part, it's made in Indonesia. The nickel that they made is it's the dirtiest form of nickel ever. Like, just look at what they're doing. And it's not just, I'm not being an environmentalist. That nickel will not be respected in the West. I can tell you. They will, if you want tax credits for your EVs, if you want to help the environment, quote unquote, they just lifted 7,500 worth of tax credits on Tesla because it's sourced from Indonesia. So it has real world consequences. And of course, China is helping Indonesia pump out more because they're trying to become the leader in EVs, so they don't have to depend on oil. Then you have Philippines, same story, very dirty. Then you have Russia and China, big leaders in uranium. Nickel. Norilsk in Siberia is a huge nickel area, and also you cannot trust that they will sell to the United States. You have Australia, you have Canada, etc. But when you think about 65% of the world's consumption of nickel coming to the Western world, and with the United States having one nickel mine right now that actually exports all of its nickel to Canada, it's in the same situation as uranium, but even worse, because the United States has plenty of idle mines in uranium. In nickel, they don't. So when you look at nickel, look at what happened when Russia invaded Ukraine. The LME, the London Metals Exchange, had to halt the trading of nickel because the price more than doubled in minutes, and then it actually, I think it tripled in like 3 or 2 or 3 months. I have to look at the chart, but the idea here is that supply chain again, supply chain. Look, under globalization, which was some see it as admirable, other people see it as an overreach, other people see it as treason, whatever. The idea was you buy friends. How do you buy friends? You tell them, hey, we can build nickel mines. It's not hard to build nickel mines in America. We have nickel. We have nickel in Alaska. We have nickel here and there and there. But instead of us doing that, we'll incorporate you into the global economy, create all these dependencies, and no one would wage war with each other. It will be kumbaya and unicorns and rainbows. But you can't bribe everybody. It didn't work. It worked with Europe during the Marshall Plan, because the Western Europe have a lot in common, very secular, democratic, etc. But it doesn't work with either authoritarian, communistic, religious countries. It doesn't work. It failed. Globalization failed, and we're moving into the next stage. And a lot of this has to be undone. And in commodities, it takes a lot of years to get this undone.
Well, I'd like to get your thoughts on the precious metals now as well. Obviously, gold briefly hitting nominal all-time highs in US dollar terms late last year before retracing. Last time you were on the show, you pointed out that it was at all-time highs in multiple different currencies, which still remains the case. What do you think it will take for gold to truly go back to all-time highs, sustain that in US dollar terms? And then any commentary you have on the silver market as well would be appreciated.
Okay. For gold, I think what it would take is for the stock market in the United States to start pulling back. As long as you have all-time highs, it's very hard to justify, um, uh, you know, a surge in the price of gold. But if five companies are weighted as 30% of the S&P 500 and the NASDAQ, and you start to see some selling or just the need to hedge, and 2022 proved that bonds are not the ultimate hedge against plummeting stock prices. They can fall together for the first time since 1974. Then you need to diversify with commodities. And that's when I think the price of gold can hit 2,100 and higher. So for me, there has to be a pullback in stocks, just like in 2016. You remember that? January 2016, the S&P 500 started to corrected 11% by August, and at the same time, gold rose 30%. And actually, the Swiss and Danish central banks bought mining stocks. So that is truly how I think that the price would surge. You need to see a pullback in stocks. And with regards to silver, I think the case for silver is kind of unique because right now the United States is not only crushing it but obliterating any other economy. China, if we knew the truth about China, we'd already call it a huge recession, like the biggest recession they've had in the modern era. But it's not like because it's not official, people don't see through the veil. My point is that the United States is such a strong economy compared to all the other economies in the world right now that they have to start looking at how they can lower the cost of doing business in America. And when you want to do that, you have to start easing. When I speak with fund managers that run my investment portfolio in real estate, they tell me, look, you cannot do a deal right now. The buyer wants to sell at current prices, and the seller thinks the price is 20% below where it is right now if he just holds off because you're in a bind, you have to refinance your mortgage. The whole thing is based on these huge high interest rates, and the buyers think, hey, interest rates are going to get cut. The sellers, they don't want to pay. They rather wait. If they cut, then they'll buy with less risk. So when you have so much of the economy frozen because of this, because about 10% of the U.S. GDP is housing directly, you have to start cutting. So to kind of answer your question, silver to me is a play on a weaker dollar, and the weaker dollar will come in when the Fed starts cutting and inflation remains sticky. And I think we're about 3 months away. So I would do nothing right now with gold or silver. The reason I say that is because rate cut odds keep pushing. They were first in March, then they went to May, now they're in June, and who knows? So that's one thing. Secondly, the volatility in the price of gold is non-existent. In other words, it's been the range has been between 2020 and 2050 an ounce, and today it's just over 2,000. It's the first real volatile day in about 2 months. And when gold volatility is this low, the next move is huge, but it can either be up or down. If it's up, what do you care? You lost $100 on the way up, but the risk profile has diminishedly decreased because you know it's a real breakout towards the 2,400. And if it plummets, you can pick up more at 1,800. So that's with regards to gold. It's don't do anything right now. With regards to silver, as I said, it's a leverage play on shorting the dollar, basically. And so if you think it's coming in May and now it was pushed to June, why do anything? Wait until the Fed starts to talk and hint that the first rate cut is coming in June, and then you can start trade silver. When the silver bull market begins, I think that you will see prices north of 40 in the next 2-3 years. So that's where I'm at with silver.
I want to get to the Fed in a second and how you anticipate how they're going to approach things. But first, I want to touch on the broad market. You mentioned you think it's going to take a correction there for gold to rise to a significant level and maintain that. The S&P 500 and NASDAQ continue to grind higher, reaching new all-time highs. This just feels like a textbook case of mania and overvaluation straight out of Ben Graham's, The Intelligent Investor back in the day. It's a dangerous question, but is there something different this time that means a broad market crash isn't necessarily going to happen?
I'd start with something that would fill your inbox of comment section by saying I don't think this is a bubble in stocks at all. And if you look at go to wealthresearchgroup.com/2024. That's my 2024 portfolio. It hasn't changed much from 2023. If you look at all the companies in that portfolio, you'd see that if you bought them in January 1st, 2023, you'd be up over 50% as a portfolio. So that portfolio beat 99% of active hedge funds in the world, and it basically did what the NASDAQ did in its best year since 1997. And at the same time, I know for a fact retail is hiding, tucking, parking in money market accounts. So while they made 5%, I made 50. My point is that this is not a mania at all. The people buying NVIDIA are not your retail people. This is Wall Street. Wall Street is extrapolating that we have a productivity and AI boom on our hands. Whether or not they're right is a different question. But if you narrow out the Magnificent Seven, the rest of the S&P 500 or the rest of the NASDAQ 100 they're not in a bubble at all. And so if you look at the entire stock market, if you look at pessimism and all the other indicators, nothing is pointing towards a mania. And if we look at 2022, where the NASDAQ fell 33%, I would argue we've already had a bear market. We've already had a bear market. So keep that in mind. I think we are in a bull market. And so in bull markets, there's always, areas where the market gets frothy. You need a 5% correction, a 10% correction. But, millennials are entering the peak earning years. They are grossly underinvested in stocks. And when they start to move their money to Wall Street so it can manage it, when they start to trade on themselves, there's so many trillions of dollars coming into the United States. And I would argue that rightfully so, because the United States, now that it came to its senses and it understands it needs to build an industrial base, it needs to be the leader in artificial intelligence and in the fourth industrial revolution. When you think about the power, the adaptability, the resilience, the innovation, everything that the United States has to offer, plus the fact that they are energy independent for the first time in the modern era. They have enough energy. They have the lowest cost oil in the world. They can create all of these industries that other countries just do not have the capacity to create. Please do not bet against America. Don't do it. I think that when you look at how the world is getting structured right now, America has clear competitive advantages. The government is doing a lot of crazy things, but it doesn't matter. The private sector is incredible right now. And I can, look at my portfolio, go one by one. If you find any company in there, if you find any business in that portfolio that you wouldn't say this is like the cream of the crop, um, let me know. Let me know which one is it. The best companies in the world are in America, and this is not a bubble in stocks at all. In fact, call 10 of your best friends and ask them if they're buying stocks right now or where are they putting their money. That'll be your best indicator. Are they giving you stock tips? Definitely not. So I think that for most people right now, they need to realize bubbles in the market is when the retail public is grossly participating. And that's just not the case right now whatsoever. Yes, there is overvaluations in some sectors. There's probably mini bubbles in some sectors. But overall, this train is moving higher.
Very interesting points there, and particularly when you're talking about energy, natural gas also extremely cheap in the United States at the
Extremely.
moment. Yeah, and Doomberg has actually brought this up that the coming recession might not happen as strongly as people think it might, due to the fact that the U.S. is energy independent, as you said, and the cost of energy is very low, which is excellent for business.
Can I just say one thing? The
Yeah.
most contrarian bet is that inflation sticks around, so the Fed has to do higher for longer, and yet the economy grows. That is literally the most contrarian view, right? Have you heard of that view? No. The view is, hey, if it's higher for longer, everything will crash. Commercial real estate will crash. The banking, the original banks will falter. The whole thing. If they cut, then everything will rise. And I'm telling you that the real story is that we have sticky inflation because we're moving all of these supply chains back to the United States. That costs a lot of money. That costs a lot of training. That brings the salaries up, services up, everything up. But at the same time, it creates productivity and it creates a real economy and not a fake global economy that was never supposed to be. The real historical mistake that people will study in 200 years is how the Soviet Union fell in 1 year, because the Roman Empire fell in a few, in a couple of centuries. How did a power, a superpower, that in the 1970s was ahead of the United States, by 1991 was done? And so when that happened, nobody had a plan. Like literally, nobody had a plan. And the most ambitious plans that came out of U.S. think tanks is, we have no real enemies. We can consolidate and make everyone American, basically. Globalize the entire world. And it obviously failed, but we are not there. That's it. The United States Navy is not big enough to patrol the open waters. That's it. The Bretton Woods system, all of these, the UN, everything you've been accustomed to think is running in the background. The IMF, the World Bank, this whole thing is coming undone. Now you're gonna see them clinging on, just like the old guard likes to cling on. But it doesn't matter. The real demographics, the real interests in the world are moving away from this and into a world where it's regionalized. In other words, China is going to find their allies, the US will find its allies, India will find its allies, and you'll have a multipolar world. The United States will be the world's largest economy. It will keep being the natural leader, but it will not be the policeman that we've all been accustomed to in the past 80 years. It cannot take on the weight of solving the problems in the Middle East, the problems in Russia, the problems in Taiwan, the problems in Africa. It doesn't have the wherewithal to do that.
Yeah, I think that's an interesting and balanced take, because a lot of people believe that because of all these things you've outlined, the U.S. no longer policing the world, that somehow that means the U.S. is falling apart domestically as well. Throw on top of that all of the sensationalized media we see, the political situation, America's more divided than ever, and people kind of draw a correlation to the fact that, well, that means America is just done in general, when that's not necessarily the case, as you pointed out.
Not at all. In fact, if you study the history of the United States, there's a number of books that I would suggest just look at it. But there is one where you actually go decade by decade since 1776, and you realize what that country went through every decade. It has a moment where you say, that's it, America's done, that's it. We've assassinated Lincoln, we've done this, we have civil war, the whole, it through thick and thin, that country has been able to do what no other country has done. I can, if you want to, it will take me an hour to list you all the reasons why it's the golden goose. But it is the golden goose that keeps on laying eggs. And even though politicians are going to be, you have petty politicians, and then you have your Kennedys and Lincolns and Roosevelts. They will come along, and they will come along again. The free enterprise system is the best economic engine in world's history that will not change. America will not change. And now that it understands its weaknesses, I think you'll start see them taking care of it, because there's a lot of shenanigans, obviously, a lot of divisiveness, a lot of infiltration of influences from China and everywhere else. But I think, in the end, America is going higher, and they will need to deal with the national debt. It's not like it's not a problem. They will need to deal with a lot of things, but they will deal with them.
Well, let's shift to the Fed and the ECB as well, and what you anticipate from them. Many are expecting they'll be forced to cut rates to some degree this year. Some are in the higher for longer camp. It's tough trying to interpret many things that Powell says. He kind of turns from hawkish to dovish in the same interview at times. We obviously recently saw harder than expected CPI and core CPI prints. What are your thoughts on both the Fed and the ECB, and what direction they're headed in?
So many central banks have already started to ease and cut around the world. There have been tens of cuts already. But if you look at what Powell has to grapple with, there's two things that really are the key things that when he wakes up in the morning, those are like what I call the main questions that he asks. One question is, am I like Barnes? Am I like the Fed chairman in the middle of the 70s that called victory on inflation and then it shot to the moon? And secondly, am I the opposite? In other words, am I waiting too long? And when I start cutting, inflation will start to settle at the 3%, and I won't be able to get rid of that. So he is thinking about very important questions, because once you start cutting, the worst thing is to go back and say, oh, sorry, that's wrong. Now you're creating all of these. You're basically telling investors there is no playing field. I don't know what I'm doing, and until I figure this out, you should probably just take cash out. So you don't want that. And so as long as unemployment is so low, as long as the economy and the stock market are this high, this buys them time. And so if I was chairman, I would do the same thing. I would keep saying, it's looking good, but we need more assurances. It's looking good, but we need more assurances. And what will happen is they'll get behind the curve, but then they'll start solving it. Because what's unique is that they've raised interest rates so much, and it's so tight that they can start cutting. And even after they cut 1 full percentage point, you're still at 4.25. So they've given themselves a lot of room with this very brave moves with the rate hikes. The market never anticipated interest rates going to 5.25. The highest I've heard before this got started was 2.75, and that was like people thought everything will get destructed at 2.75. So my main point is that you should not be an economist; you should be an investor, and therefore, you can't control it. Just deal with it as it comes along. The most important thing as an investor is to find great opportunities and not to know what the Fed is saying. In fact, Warren Buffett once said that if Bernanke came to his ear before every meeting and told him what he's going to do, that it would make zero consequences on what he would do. And that's literally from the person who makes $5 to $6 billion a year. So I think, who are we? To me, it's way more important to be an investor than to be an economist. And while, yeah, the Fed is important, it's certainly, you can't discount the Fed. Earnings are really what drives the market in the long run. And right now, if you look at America, companies have adapted. Companies have made huge changes. Companies have made huge changes to their personnel, to their supply chains, to the way that they do business, to how they market, to everything. And it seems to have worked very well. So I think that the Fed will cut just because interest rates are extremely high, but they can take their time. And I think that we are in a higher for longer. I think by the time 2027 rolls by, so a few years from now, I think we will still be above the 2% Fed funds rate. So we're just in an inflationary period. The Fed's win, in my opinion, is if they can just smooth out this period instead of it being erratic. If it can be smooth, but they cannot change demographics. They cannot change baby boomers retiring and millennials coming into the workplace and demanding higher wages because they're a small generation, and they cannot change all that. They cannot change the global economy by cutting interest rates. They can smooth things out.
Well, let's talk about deglobalization. This is something that you've touched on already. I've spoken to Louis Vincent Gave, who actually calls it a new era of globalization between emerging economies where the West isn't as much of a participant. He has kind of an interesting viewpoint there. I'm wondering what your take is on this trend of deglobalization, and most importantly, for the purposes of this show, what does it mean for the commodity sector?
Okay, so the globalization, and deglobalization are big, huge cycles. The last globalization cycle before this one was between the 1870s and the 1910s. And in that era of globalization, Edison invented electricity. The Orwell brothers, invented airplanes. It was the first industrial revolution. A lot of amazing things. Then the start of the deglobalized era started with Europe. The years leading up to the First World War, and then you had the First World War, and then America closed its gates to immigrants. The 1920s were roaring, but at the same time, you had the Great Depression at the end of that, the rise of fascism, the rise of Nazism, World War II, and then deglobalization was over. So deglobalization is not fun because you basically take all of these things that you've been able to build, all this trust of globalization, and then nobody trusts anybody. And that gives rise to suspicious regimes, and suspicious regimes are more violent, and people are more protective, etc. The Marshall Plan was the big, and the formation of the UN, the IMF, the World Bank, NATO. This was the beginning of globalization, and it went to hyper mode in 1991 after the fall of the Soviet Union, where America just spread everywhere. When they did that and incorporated China into it, with the inclusion in the WTO, they literally built their next threat. And by 2011, Americans became convinced, as did the government, that China is a real threat. And that you're basically fueling your threat. And so Obama started with the pivot to Asia. That was the big speech in 2011. Luckily for him, an entrepreneur in America invented fracking and helped speed the lack of need for America to be in the Middle East for oil. And really, when America electing Trump into office tells you is we are done with globalization. We don't care for globalization. And in 2018, he gave the famous UN speech where he told all of the NATO members, if you don't chip in, it's over. So he basically ended globalization, put tariffs on China, which is the end of free trade, and ushered in the new era. And the way he wanted to do that is to create a détente, which a détente in French is some sort of a relaxed mode in the Middle East. So he was able, with the genius of Kushner, to bring the Abraham Accords into fruition, which was supposed to create a very relaxed era in the Middle East. And it was so relaxed that Iran and its proxies rejected it when Saudi Arabia was about to normalize relations with Israel and basically create a world where the three big religions are normalized. That would have ended the Belt and Road Initiative by China, the North to South Belt and Road Initiative from Russia to Syria and to the Med. It would have changed the entire world, and so you see what happened because of that. And I think that the world we're moving into is, first of all, nobody knows. It will probably be somewhere in the middle of all these theories, but it's going to be more regionalized. And so the United States is going to look at Mexico and say, how can we make Mexico even a bigger partner? And Mexico has a full stretch of land that's not industrialized yet. And when that's done, they'll probably move into Colombia and these other countries that they can build out. China will do the same. And there's a rise of a third bloc that is the global south, which are these huge demographic countries, India, Brazil, and others, that are very poor, but in total GDP and in total influence, they're huge. And we've never had, this is unprecedented for poor countries to come along and use their demographics as their leverage. So we're seeing a few very interesting dynamics happening. I don't know how this is going to look like, but I do know that as an investor, if you are invested in the real beneficiaries, the artificial beneficiaries of globalization, that your investments will suffer. Case in point, China, which, if the United States didn't help it so much, it definitely would have been still a second world country. And other countries as well, which offered nothing of value to globalization, but because they were part of it, they got richer. So every country should look at what its true competitive advantages are. What are your assets? What can you give your partners and allies? What can you offer your region? And that is your future. America will no longer finance for the rest of the world everything. And so even though the Senate just gave a $95 billion package of aid today, it's truly not the real momentum in the world. It's true that the United States cannot tolerate if Russia conquers Ukraine and then has more ambitious expansionary ideas into Poland, for example, which Tucker Carlson's interview clearly states, where Putin says, Poland is to blame for World War II because they didn't give that corridor to Germany. If they had, there would be no World War II. So he's basically making the claim that, hey, we also have a claim to Poland. They should just give it back. It's historically Russian, and we want it. Same with Hungary. And of course, he has probably claims on other countries as well. So I think that's what's at stake here. And of course, the same goes to China and taking over Taiwan. And in the Middle East, it's a whole slew of problems. But I think that if Biden gets reelected for a second term, that term will be very different for the first term. And if Trump gets elected, like I said, it's going to look a lot different. And yeah, globalization is dead. It's just how will it get unwind? And that of course plays into the dollar. The dollar will have less of a role in the future than it does today. You cannot have a reserve currency where 40 countries are currently being sanctioned at the SWIFT level and others. It's dead.
Well, Lior, this has been an amazing conversation. Thank you so much for joining us today. Before I do let you go, for those who want to learn more and look more into your work, tell us about Wealth Research Group, where people can find it, and what it is you do there.
Wealth Research Group is a free financial newsletter, and the the basic premise of it is that I like to take all my thoughts, all the conversations that I'm having with fund managers, CEOs, and all the content that I consume personally, and my insights, and basically write them down. And instead of just keeping it to myself, I publish it. So 3 times a week to your inbox. What you heard in this interview, if you like that in a 5-minute compact read, that's what you get 3 times a week.
Great. Well, I'll put a link in the description below to Wealth Research Group so people can subscribe. I'm subscribed, and I definitely recommend others do the same. Very insightful. Thank you so much, Lior, for coming on the show, and looking forward to doing it again.
Thank you, Jason.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.